Proud supporters of Africa this week. Engen, with us, you are number one.
The rush to create climate-friendly economies may yet produce tangible gains for Africa's least developed nations. Nick Francis, Executive Chairman of Cool NRG, explained the business of carbon trading.
Well, actually, it's not very well understood. That's for sure. I mean, it's you're kind of trading something that hasn't happened. So there's no carbon in the air, so we're trading that. So it's not real. It's not like gold, or it's not like wheat, or it's not like oil. So it's hard to understand. But actually, as a market, we trade as much carbon every year as we do wheat sales, for example. So yes, it is very real, and it does happen. And I think the thing that you're trading is when we create energy, we burn coal, we burn fuels that create CO2. We want to reduce that. So those people that reduce it, we'll pay them to do it. And for every ton they reduce, we'll pay them a price. So what we're actually paying for is, in some ways, having nothing, not having that gas in the air. And it's very real and very big, and lots of people do it, but it's new. It's not well understood yet.
Yeah, okay. Continuing on that tack of it not being well understood, there is a sense that Africa could benefit tremendously because we could create zones or areas where some of those trades could be predicated on. So a company that's a polluter in Europe could say, for a particular tract of land in Kenya, I'm prepared to buy so that I can pollute today for planting of trees in the future. I mean, I know I'm being very simplistic, but apparently we should be trying to leverage our position in that way.
Sure. So, I mean, one of the things that you can do is plant trees because they use CO2 and create oxygen. What I do, in fact, is energy efficiency. And the reason we do energy efficiency, and we do it in people's homes, is because we're interested. If you can change everybody's lighting to be more efficient, you can reduce their power bills significantly. And so one of the big issues for Africa is not just that we haven't got enough energy, and that energy creates CO2, but that energy is very expensive. And for a family that's struggling, actually, if you can reduce their energy bills, that's very important.
Right.
So one of the things that we do as a company is we go out and at the moment in Mexico, in the next few months, we'll be giving 26 million energy-saving lights to the poorest families in Mexico. And that will save them 1 month's salary every year. And the government have paid to do that, but they're going to get that money back because we've helped them organize selling the sales of carbon or the CO2 to pay for that program.
In terms of your assessment of awareness, I know that in South Africa, for instance, our energy utility is also distributing those energy-saving lamps. I have some in my home, for instance. But they're also talking about banks coming to the party, for instance, and being able to provide mortgages that will support the installation of solar geysers in new homes, for instance. So there are a lot of these initiatives. The question is the uptake. You know, when I think of buying a new house, which I am, I'm not thinking about a solar geyser.
Yes, well, and you should be. You should be, because it will pay for itself in a very short time, within a couple of years. Secondly, it means then in the past, once you paid for it, you're then getting free hot water, not very expensive hot water. We know that the price of energy is going to be going up over the next few years. And you're right. The banks are now coming to the party and saying, when you buy your house, we will allow you to just put an extra little piece on your mortgage to put in an energy efficient geyser. And that means that you're getting low cost mortgage and getting lots of savings into your home. And partly that's going to be subsidized by creating carbon credits that will help pay and subsidize for that solar hot water system.
And finally, just in terms of using the capital markets, I know that South Africa's JSE has been dabbling with carbon credits. We know that some banks like Standard Bank, I know that you've partnered with, are also providing over-the-counter trade in it. The issue is, how does an investor assess the viability of a fund or a program based on the avenues for investments? Because some of the companies in South Africa are deemed the worst offenders when it comes to industrial pollution. And as you look at investing in equities, these are some of the things you're going to have to gauge as you make your valuation.
Absolutely, and some of the brightest and those companies that are getting to grips with this, are thinking ahead, are going to be in an advantage, because not only is it costing them money to pollute, not only does it mean that they're probably not using their energy well or wisely, but if they get good at reducing it, they will be able to in fact sell those reductions back to European power producers that need to buy those credits. So not only can you get the savings right now, but because of banks like Standard Bank that are being able to aggregate these savings on behalf of industries, they can then go and sell those carbon credits into Europe and put some of that money back in to those African banks. It's really important for Africa as a country to be maximizing this. Over the last 5 years, China has, India have, and Africa's been slow to recognize the enormous amounts of benefit, both in terms of cash and in terms of technology, that we could be drawing to the continent through carbon trading.
Leading global business educator Dr. Liz Mellon, Executive Director at Duke Corporate Education, has published her new book, Inside the Leader's Mind. She joined us to discuss effective leadership traits of global corporate captains.
It's one of the things that's puzzled me. So I've actually been coming in and out of South Africa for 15 years, but working in business education, leadership education for 25. And one of the pieces that has puzzled me is exactly that, what distinguishes the leader. And I think we focus a lot on behaviour. We worry about how a leader behaves, which makes sense because, you know, if you treat me well, I'll feel better about following you than if you don't treat me well. But I think we've missed something, and I think what we've missed is how a leader thinks. So my book is really about peeking inside the leader's mind and asking how the leader thinks. And that's what I've found, is that leaders think in 5 remarkably similar ways.
Talk us through those 5 very briefly.
I like to think of it as the fingers of one hand, and the kind of centre is the thumb, because the thumb touches all the other 4, and that's the solid core, and that says I have strong values, I'm authentic, you're being led by someone you can trust. Leaders make change happen. If we just wanted status quo, we'd hire managers. Leaders make change happen, so they take risk, no safety net. They're comfortable with that. I mean, it takes them into uncharted territory. It's not always clear which way they should go, but they live with that tension, they swallow it, they don't pass it on to other people, they still look confident. They're okay being discomfortable, if you like. They think very carefully about the future, but they're also thinking about the past. So they're thinking about valuing the past, but also moving towards a different future. And then the 5th one is I am the enterprise, which means that they really represent faithfully what the enterprise or the organisation stands for.
Let's begin with those core values, because the book is divided into 7 chapters around those 5 core tools. The idea of personal tools, I grapple with this one because I always say to people, increasingly we're told that you are a personal brand. You know, I may work for CNBC, but I am Lerato Mbele first and foremost. And who I am, my integrity needs to come through, but that also needs to reinforce my loyalty to CNBC. Often I think these two are very conflicting principles, but you're saying not.
I don't think so, and I think that, you know, CNBC would be less without you, but you also would be less without CNBC, and I think it's exactly the same for corporates. It's a symbiotic relationship. So I don't know if you scuba dive. I love scuba diving, and there's there are these beautiful little striped fish called clownfish, and they sit in the anemone. And it's a symbiotic relationship because the anemone looks out for the fish and protects it, and the fish looks out for the anemone and protects it. One can't survive without the other. I think it's the same. I think you need to follow a leader who you can trust, who has strong values. You know that they're looking out for you and the organisation, not just building their own career. So that's important. But at the same time, the organisation needs to look after the leader, but one can't be without the other. It's about bringing the two together, and the best leaders really represent the organisation.
How does that principle apply in the modern day? You know, because somebody wants to find integrity for me as what you think, what you say, and what you do. All have to be the same thing. And often what leaders are thinking to grow the business, what they say in terms of encouraging the staff, and then what they do, especially in the midst of retrenchments, are often contradictory forces.
And that is what a wonderful way to look at it, because one of the pieces in the book is exactly that. You've got to say what you do and do what you say, and be consistent with your values and what the organisation stands for. Otherwise, you will lose people's trust, and trust, once it's lost, is very, very difficult to get back. But if you think about, you know, if I say apple, what do you think? Steve Jobs, right? And you know, if I say South Africa, what do you think? Nelson
Nelson
Mandela.
Mandela,
Okay,
yeah.
so it's very important, and these are leaders who are consistent in their behaviour. They're consistent. Now they may have to lay people off.
Yeah.
They may have to suffer extremely hard times. But they're consistent throughout, and that's important.
Africa should cultivate its human resources potential as a performance resource. This is the view of Jeremy Langley, Regional Director of Western Europe, Middle East and Africa at human resource firm Lumisi. He was delivering a presentation on talent retention strategies in Africa in Johannesburg.
My perception is that HR in South Africa has become somewhat risk-averse and traditional in nature, largely administrative. And I think that's because for the last 15, 16 years it's become obsessed with regulation and compliance for good reasons. But that means it's stopped looking outside and really focused internally, and that's been bad for South African businesses.
What do you think is the overall effect on organizational development and leadership?
Very simple: economic stagnation and bad management. So if I'm working in an organisation where I have a manager who is not very competent, who isn't rewarding, who isn't coaching me, and I have an environment where it's not very easy to go out and get another job, I'm going to sit for 2 or 3 years and become increasingly resentful. The minute the economy comes back as it is doing, I'm going to use that opportunity to get my CV out into the marketplace and go to an organisation who values my skill and my abilities more highly than my current employer.
Another question facing South Africa is that of performance evaluation, return on investment, and reward for employees.
Performance management starts with strategic objective. So I need to understand where the organisation is trying to get to, and ideally that should be documented into a series of fairly measurable goals. What I then do is I take that performance, that objective, and I cascade that through my organisation so that your goals make sense to the organisational goals. Then when you succeed, I reward you in proportion to the quality of your work. So it's very, very important that I do 2 things. First of all, that I understand where the organisation is going, so that you understand the point of your job, and secondly, that when you succeed, I pay for results because they're delivering to the organisation's goals. If you don't link to organisational goals, I'm really just paying you to turn up. And as an organisation, I'm losing one of the most important leverage points for driving productivity.
Langley believes that Africa has proved immensely capable of producing world-class leaders and can grow its human resource potential beyond current stereotypes.
When anyone looks at Africa, what they see is a huge wealth of untapped resource, whether it be mineral wealth, whether it be gold mining, iron ore, etc. People tend not to look at Africa as a source of talent. But what we have in Africa is a huge source of talent that actually, if we can harness it, and I understand the expression that you use in South Africa is beneficiation. What we're really looking at is beneficiating, if that word exists, beneficiating the talent pool that we have in Africa, bringing it on board, using education, using learning, using performance management tools to actually make that the biggest source of export for the African economy. So I think the potential is absolutely enormous, but what we have to do is grasp it, invest in it, and rather than seeing the talent challenges in Africa as being a problem, start seeing them as an opportunity.
His view is shared by Phuven Ramsamy, Director of HR Focus Holdings, Lumi's partners in talent management in South Africa.
To achieve many of the things that we as South Africa have achieved to now takes enormous amounts of talent, and across the board, not just at the higher level. Our workers, our middle management, all of them have contributed to our success as a country, including the World Cup achievement, including where our organizations have gone to, including our political dispensation and what we've achieved. So there's no doubt that we have an abundance of talent. We just haven't found the right mechanism to tap into it appropriately. And there is no silver bullet. It takes a lot of small incremental changes, but start first at looking at the untapped talent as potential, not a problem. Don't look at the youth unemployment rate of 50% as a big problem. It's actually a young workforce ready to be productive. Let's find a way to make them productive. Look at it as an opportunity. Those people want to work, they want to contribute. Let's find a way to bring them in, and we can definitely do that.
Ramsamy also believes in Africa's potential to overcome its human resource challenges.
We're not short of talent in Africa and in South Africa. We have an abundance of it. We're short of skills and tapping that talent. We've delivered very good value in delivering in giving global leaders to the world. What we need to do is embrace those strengths and scale it at all levels in the organization and in the country. And using proper solutions, proper technology solutions, we'll be able to scale the methodologies on a much larger scale and pool that talent in a much more effective way than we've done before.